I'm Matt Bouchard with REIT.com here in San Francisco for REITWorld 2013, NAREIT's annual convention for all things REIT. I'm joined today by Jeff Horowitz, the Global Head of Real Estate, Gaming, and Lodging with Bank of America Merrill Lynch. Jeff, thanks so much for joining us.
Thank you very much. Appreciate it.
Let's start by talking about the IPO market, which seems to have opened up a bit for REITs this year. Have you been surprised by the activity?
You know, I haven't been surprised. You know, first of all, let me give you a few facts. So 2013 was the biggest year for REIT IPOs since 2004. About the same number of dollar volume raised, less transactions, so bigger deals this year. But if we were sitting here a year ago, we knew a few things. First of all, REIT IPOs don't happen overnight. So we had an active pipeline, we had a shadow pipeline. And from a demand perspective, we knew certain things were very positive for us. REITs had performed very well for a number of years, so valuations were pretty good. Funds flow was very robust, and we had a lot of new investors joining the sector. So a very good backdrop. From a supply perspective, we also had a number of good things also going on. First of all, we had a lot of niche sectors that were about to grow and expand. So think about things like single-family housing or data centers. We also had situations like roll-ups that were taking place for a long period of time, like Empire State Realty Trust. And we also had companies that went private in 06 or 07 or during the downturn, companies like Brixmor. So we knew all those companies were out there and they were about to come out. Fortunately, the stocks have performed well. And so that's been a very positive outlook for us and will continue to be. One thing that's not in the numbers, but I think is also significant to talk about, is that a lot of the non-listed companies or non-traded REITs listed. So that's another part of our sector of new companies that exist today that didn't, and that's not in the numbers.
Now, you mentioned that obviously deals don't happen overnight. So how does the pipeline look now, and what might we expect in 2014?
I've been saying for a number of years that we're basically in a bit of a mature sector. So every year we'll see a handful of IPOs, we'll see some M&A, and those sorts of things with certain aberrations. And so last year I put a little bit in the aberration camp for the reasons I just discussed. So this year, pipeline much smaller, much less activity. On the flip side, if we see some things, there's a market that's wide open for it. Companies just have to be able to hit certain criteria. They need to be of substance and scale like the companies we saw this year. They need to have good management teams, growth stories, balance sheets, or some type of niche. Same types of things that work in all types of markets.
And in addition to IPOs, we've obviously seen a lot of public-to-public mergers. The net lease sector has been quite active. Looking at 2014, what sectors do you think we might see more of that type of activity?
So public-to-public mergers are tough, right? Social issues are one of the biggest issues that are out there. There's only so many synergies. There's high transaction costs, and REITs tend to trade somewhere around net asset value. So there's only so many benefits from that perspective. So that being said, we did see a pretty active year this year. This is, I would call, a top quartile year out of the last 20, so about $50 billion of M&A deals. On the public-to-public side, we saw it in multifamily, and as you mentioned, net lease was really the story of the year. So similar to healthcare REITs of a couple of years ago, we saw tremendous consolidation. Again, the non-traded REITs led to this fire that we saw, so tremendous activity. I think as we look forward, we'll see a lot more of that, and still in that same space because of the amount of assets in there. But we're also going to see something that we haven't seen in a while, which is some public-to-private activity. With interest rates low, debt very available, I think you'll see a little more activity on that front.
Great. Jeff, thanks so much for your insights.
My pleasure. Thanks so much.
For more from REITWorld 2013, be sure to visit REIT.com.